the microfinance sector in this country at the moment is going a huge revolution and changes emanating from emerging technological solutions that are coming into this market. Primarily disruption through fintechs, disruption through digital lenders, and even old traditional institutions that are adopting technology as a way of reaching customers. If I look at the financial space at large, I see three main players, dominant players. I see, our peers, microfinance institutions, small in scale, doing the same thing, targeting small-scale entrepreneurs, smallholder farmers, using traditional crude methodologies. Then I see another category of fintechs that have come into this space, doing short-term loans, nano-loans, small in value, for consumption purposes, but also a little bit expensive, or rather costly credit to the bottom of the pyramid. Then I see commercial banks that have been in this market for long, commercial banks that have been around for close to 100 years, if you think of them, that have for a very long period of time focused on, just the cream of the society. But because of changing environment, technology, legislation, and especially interest rate capping, they've been forced to rethink their business model and deploy technology in a manner that allows them to reach the bottom of the pyramid with small ticket loans, but cost effectively. Small ticket loans that they abilited in the past because of two major reasons. One, costly to deliver. Secondly, they were deemed risky, or ability to pay cannot be quantified, and therefore you'd rather not touch that segment. But technology has made all those two major barriers to extending credit to the bottom of the pyramid a thing of the past, because it's now easier and cheaper to extend loans of $200, $10, whatever amount it is, through mobile telephony. Credit scoring through use of sophisticated algorithms makes it easier to even now make credit decisions without necessarily involving, human interventions, reviewing loan applications and processes. So it becomes cheaper and faster. But then interest capping came in and reduced the ability for commercial banks to make as much as they would have wanted in terms of interest income from loans. So if you package those small ticket loans as commission-based credit facilities, you circumvent that kind of legislation. And we've seen nearly every other commercial bank has come down to that target clientele. And therefore, the microfinance landscape in the country is completely redefined over the last 3 or 5 years and has changed enormously. If you look at the population for this country, we're talking about 55 million, plus or minus, people in Kenya. About 80% are now what you would call financially included, simply because they are able to access financial services through mobile telephony, which is a major milestone. But then the biggest question is, what financial services, what financial products are these that are being delivered on mobile telephony? Are they products that actually suit the need for those customers? Are they products that are able to support business growth, business development at small scale level? Are they working capital loans or consumption loans? And therefore they can contribute into the well-being and growth of the economy. And in most cases, you will find the answer being a no. And therefore that's where an institution like Musoni comes in. And we are not a fintech, we are not a traditional lender, but we are a financial institution that leverages technology in order to reach the customers we are intending to reach. And those customers are able to access sensible loans, sensible financial services from us that are combined both financial services and non-financial services. And that's what the population at the base of the pyramid is looking for. It's not looking just for easy credit, expensive credit, you know, short-term credit, nano-loans. They're looking for financial solutions that will help their businesses prosper. And that's what we live to serve as Musoni. So we come in with solutions, financial solutions that are suitable and tailor-made to these customers in terms of loan profiles, loan sizes that are commensurate with their business needs, loan tenures that are also aligned with the cash flows of the business, and with pricing that is sensitive to the nature of that client so that it is not exploitative, it doesn't have hidden fees, is as transparent as possible. And that completely defines us as an institution and separates us from the rest of the players in the market.